Commodities are likely to continue to do well in a high inflation environment. The Middle East conflict is only going to add to supply and demand issues, especially from the commodities markets, as countries look to hold back their supply for domestic consumption. That really flows into more volatility or potential opportunity on the share market when we're looking at a lot of these commodities. The person who's been understanding, unpacking and ciphering through all of the market is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yeah, I'm great, Chris.
So you've been watching what's been happening with markets. We know you've studied how they work in inflation environments, what to expect. We'll talk about oil and gold shares a little bit later in the report because you've picked up a few of those to discuss. But when we're looking at the overarching movement, you're looking at indices falling. What's standing out to you this week?
Yeah, I think like in, I guess when we're looking at the lows there for October and also in March there was definitely sort of subsectors there that were holding up the market were stronger there. So I think there was a few sort of stocks there, like, sort of zeros and 360s, MB1, things like those sort of stocks were definitely sort of showing some leadership at the time there. So it's interesting, we've had another pullback here into late October here for the equities market. It's just interesting to see which stocks are holding up the best, and that does seem to be a lot of the commodities there. So obviously gold's had a bit of a run the last month. We've seen obviously the oil price not too bad, sort of hold up there, but the last week or two there, but quite a few of the iron ore names, Chris, as well, showing sort of relative strength as well. So just that commodities basket there, and that does come around to that. Obviously, they do well in high inflationary periods. And obviously, inflation is still, still fairly high here. So hasn't, a lot of economies haven't got it under control really, and it does tend to be sort of a lot stickier than most people think. I don't know where half the economists in this country got their representatives from, but they clearly haven't read much about inflation in the history of it and how sticky it is. Otherwise half of them wouldn't be saying we need to cut rates here. They clearly don't understand the ramifications of inflation historically and what, just how hard it is to get rid of inflation, how damaging it can be longer term. So, but I guess for equity markets, what that means is that commodities are generally pretty buoyant if inflation's high, and I think with a lot of the turmoil around the globe here, you're just starting to see, there's an interesting couple of announcements there last week with the graphite and with China and stuff there. We might sort of see, supply chain issues, just countries holding back domestic supply. That's going to be sort of fuel even more strength in some of these commodities there. So just pretty interesting there for commodities in general there. So potentially we'll get a bit of a bounce in some of those stocks even further here. But I think the market's sort of due for a bit of a bounce here. Did notice some really interesting timing there yesterday, Chris. I don't know if we're probably jumping ahead a little bit here, but on the XJO, I was looking for the market to come back to, I think it's sort of 67, 60, which is sort of that old level there. Really like to sort of see it come back to that level. So it did sort of come back and flirt with that yesterday. And that's exactly 90 calendar days from that 27th of July high here, the last sort of swing high. So I've noticed when I look at sort of 10-year, 4-year, sort of look at a lot of the seasonal cycles there. Some of the GAN cycles, I find that they're not as reliable in really bullish or really bearish markets, but in sideways orientated markets there, these sort of half-year, 1 quarter, 1/8 sort of cycles there, I do find that they can be really useful, and we do get a lot of turns. Particularly sort of from the 1 quarter and the 1.5 sort of cycles there. So just got a little bit of timing here for the XJO. Still got to see a bit more evidence there, but do love the fact that we did see a nice bounce from the Dow last night off that sort of level there. Just does need to sort of show a bit more here first, but just we had some pretty deep pullbacks here so far. But I think largely here, high inflation environments are going to be more sideways there. So you're looking for sort of, some sort of timing selling points there. But definitely going to be, just interesting week ahead here. I'd love to see a bit more. Hopefully it's go up a couple of days, maybe pull back a couple of days, go to a new low. If I see something like that, market hold up here, that'd be sort of supportive there.
Okay, so that's Aussie, the Dow, and then would the S&P 500 and the NASDAQ be a bit of an extension of what you just said on the Dow, sort of testing those levels and then possibly turning the corner?
Yeah, I just thought maybe they've had a decent pullback there, maybe broken some of the ranges there, which is maybe obviously definitely negative there. But, probably just looking for some of these ranges there. I just think I'd probably keep an eye out for some of these sort of, like the 50% retracement there, things like that, sort of see the market doesn't sort of come back to around that region there. So just a few markets to sort of watch here. Still think we might get our end of year rally here, although we've been a little weaker here so far. But yeah, no, we'll see how it plays out here. But I do think the market's getting pretty negative there. Definitely all the sort of, kind of bearishness, sort of stocks making 52-week lows, all those sort of markers there are indicative of a bit of a low here. So I think we'll sort of see a rally here shortly there. The key there is to watch this rally here, Chris. So we'll probably get a bounce here. We probably want to see some reasonable volumes there. Then if we pull back for a day or two, we want to see that volume dry up there. We don't want to see sort of heavy volume come back in. So we sort of see, we bounce a few days, a lot of volume, and then we come off on heavy volume, then that might mean we want to go lower here. So it's all about sort of watching the impulsive nature of the bounce here and just looking at what sort of commitments coming in as well. So hopefully we get a follow through a day here, maybe day 4 to day 7 is sort of what we're looking for off the lows. So it could be an interesting week ahead here. But yeah, I definitely got some timing here and some good levels there at the moment. So I think we might see a bounce here from these levels.
Okay, well, if we're looking for a bounce, we definitely want to be with the strongest shares and where that greatest momentum will come from. So when we're looking at the market, when you're looking and scouring through and looking for the best shares to monitor in case that does happen, you've mentioned gold for some time. You said that oil was also on the cards. Starting off from the report from the individual shares, there's Evolution Mining, the ticker EVN, gold company. What are you looking for Evolution to happen from here?
Yeah, I just like the fact that it's been a fairly square sort of sideways correction there, like a little nice little sort of ABC sort of classic sort of three-wave sort of correction there. And we have sort of gone to a slight new low there. So when sort of gold did tuck down, we did see that little false break there. So do like those little false breaks. Had a bit of a fast move off there. The volume's been pretty healthy so far. So if we can sort of get going here, break through the top side there, we could be a reasonable upside here for Evolution.
Okay, and Beach Energy, so going to the other side into the energy and oil space. You've got the descending wedge here highlighted sort of back earlier in the year, then showing a strong breakout to the upside, nice and fast, and coinciding with some volume that you've got highlighted on the chart. Bit of a throwback to the breakout level above the sort of what you call the B-wave breakout.
Yeah.
Retesting that with a false break.
Yeah, no, definitely. It's actually not too dissimilar to the Evolution there, and it sort of really has been a bit of a sideways sort of pullback here, and we're sort of gone back up and sort of overlapping as well. And I do like the fact that it's just sort of held on top of the previous little swing high there, probably flirted with it, but largely held here so far. And just noticed that last week there did sort of scoot down, make a little bit of a false break, and then reverse quite strongly. So I do like to sort of see those turns off those sort of little springs there or false break there. So I think this looks pretty encouraging here. So definitely a strong sector there in that energy. So so I think this looks pretty solid.
Okay, well, the next one in the list that you've got is Fortescue Metals. So still in the commodity space, moving over to iron ore. It seems to be, while it's going sideways, it's broadening trend lines here, but it is coming up towards the higher side of it. And sort of, so what's of interest in this part of the chart?
What's interesting, Chris, is that massive brokers have got a valuation between $16 and $17, and we're at 22. So everyone's been pretty negative on Fortescue. Yet look at the last 6 weeks here. We've actually, the market's been under the pump. Fortescue's actually been going up here. So, showing a bit of strength there. And the last couple of weeks, the volumes have improved a bit as well. So, just showing some relative strength here, really. The iron ore chart too. If anyone has to get a chance to have a look at the iron ore chart there, that's actually not too dissimilar to the sort of gold chart there, really. It's had a few touches, a bit of a broadening pattern and sort of congesting just under the highest. That's sort of got that sort of, quite a bullish look about it. So it hasn't broken out like a lot of stocks haven't done here, but just interesting there that everyone's got a pretty negative weighting here. So what that usually tells you, if every broker's got a sell on it, then they've usually sold it.
There's not much left to sell.
Yeah. So we're going the other way here at the moment. So that's sort of not uncommon in high inflationary environments there. So that's that sort of broadening pattern there. And sort of, sort of had a little bit of not a little cup and handle there, but that's with those sort of broadening patterns is they do end up sort of having like a lower pullback there in the pattern, and then sort of break out LOA here. So probably like to see it a little narrow, but still sort of pretty positive there. And considering the weakness in the market, that is showing relative strength there.
So that's Fortescue. If we stay, as you said, the iron ore chart's looking pretty good, a lot similar to the gold in many aspects.
Yeah.
Rio Tinto, similar space.
Sort of space, probably showing a little bit more tightness in that pullback there, Chris. So instead of having it come back a little deeper like Fortescue, that's actually come back a lot narrower. So it's actually probably looking, once this Fortescue is more of a square sort of top there, this is looking probably more bullish here as well, the Rio. So the volumes have actually been pretty robust there as well. So had a pretty good volume off the low, had a bit of a retreat. The volumes eased up a little bit. In the last couple of weeks, we've seen volume pick up again here. So, this looks pretty positive as well, to be honest there. So nothing wrong with that chart whatsoever.
Okay, and staying in the commodity space, but moving further down the market capitalisation side, we're at Patriot Battery Metals, PMT, which we've discussed a fair few times from a momentum perspective and a few other aspects on the launch pad. You've got FB on the chart here. What's caught your eye on this chart?
Yeah, there's a couple of things there. Obviously, we've seen a few of the lithium plays show a bit of relative strength there. So obviously, market's been pretty weak here. We've had a nice little rally off the lows there. Probably broke out of that little bit of a down channel, a little descending wedge there. You can sort of draw that line a few different ways there, but have sort of come out of that low there. The volumes have been sort of picking up as well. So we're starting to see a little bit more strength in the trading volumes there. And so sort of, breaking that downtrend, just starting to see a little bit of strength there. Definitely a bit of relative strength as well here. So think of this it sort of tightens up. I mean, ideally here, we see a little bit of a tightening pattern here, Chris, and then consolidation, and then pop out of the range here. So definitely one to watch here. I just think of some of those lithium stocks have had a fairly decent pullback now. And I just noticed a couple of them crept into the launch pad there last week. And just, obviously commodities in general are pretty buoyant. So just, we got, obviously oil's been relatively strong here. We've seen recent strength in gold here. Iron ore the last couple of weeks. Maybe sort of lithium joining the party here. So, commodities, definitely looking very interesting across the board.
Well, then last one in the list here, second last, Capricorn Metals, back to the gold side of things. This one, so liking this chart here, sort of making most of its pattern in the top half and the top right-hand corner of the chart. So how do you view what's happening here for Capricorn?
Yeah, again, sort of really just consolidating just really closely to the old high here. So really haven't shown that much weakness. Again, considering how weak the market has been itself. We've had a pretty strong pullback in equity markets here, yet this stock is just hovering up underneath the high here. So trading volumes sort of improved here as well. Not showing too much. I think a couple of those pullbacks there, Chris, have been really light. Yeah, that one there, you can see that was sort of obvious there. Those sort of 4 or 5 weeks, just no selling in there. And we get a good volume week up, couple of down weeks, no volume again, and then we start to see volume. So this is pretty constructive there. Just staying pretty high here. So probably a lot of times that people go, oh, no, it's too close to the high. It's not, looking to try and buy those weaker sort of stocks. But, you and I know that the strongest they're the ones that sort of, when the market turns here, they're the ones that lead here. So, this looks pretty robust here as well.
But to round out the commodity space, we're going to rare earths. Linus, LYC, you've got them on the chart here. It's a bit of consolidation happening, but broken the support that we had back in July. So how do you read this break, the close under it, and then the big bullish engulfing that?
Yeah, so this one's probably the weakest here of the ones that I've covered today. So just notice, obviously, we're still in a bit of a downtrend. We've still got a series of lower highs there. So we haven't broken swing high here yet. And this is the case for a lot of these sort of lithium plays there. They're sort of mineral resources, sort of kind of rare earth sort of space there. But just did see a little bit of a false break of the previous little low there. Had a pretty bullish outside week as well. So just the sort of first signs there that we might be seeing a bit of a turnaround there. We probably want to see a swing high broken, Chris, probably first and foremost. That's probably that's the first thing we want to see there. But definitely sort of just a sector to keep an eye on here, just starting to look sort of constructive there. It's just interesting. I just think all the metals there are pretty, look, gold's obviously been probably the most bullish there so far. Iron ore starting to look pretty impressive there. Potentially some lithium names sort of hitting the register now. Maybe these sort of rare earths sort of join the party as well. So just sort of seeing that sort of whole, sort of commodity sort of space there just shows some some relative strength there. So probably quite good for the Aussie market if really commodity starts to fire up here. So you culminate that with the banks have all had their probably 10% corrections there, so they've all gotten down to, I think Westpac got down to about a yield of 6.6%. Combank was sort of sitting at 4.5 yesterday. I think ANZ was like 6.3. So normally you're sort of getting down to those sort of yields for those sort of stocks. That's sort of where often you sort of see some buying sort of come into those stocks, and they've been pretty range bound, those stocks. So they're all down the bottom of the range. You've got healthcare has been absolutely annihilated, so that's down the bottom of the range here. So just sort of seeing, across the industrials, a lot of the sectors are really sold off and are sort of on their knees, pretty down the bottom of the range. And I think the banks down the bottom of the range here and resources are showing relative strength here. So that's why I actually think the Aussie market's actually pretty interesting here, because I just see all the sort of hallmarks there of a good setup. It's just all the pieces sort of all add together here. Got a bit of timing here. We sort of come back to a bit of a technical zone. So I think all the hallmarks are there for an end of year rally for particularly our index. The ASX 200.
Well, that's hopefully something we can look forward to, especially if the banks start getting accumulated and the tailwind for commodities. We've seen that happen before, and our market goes for a roaring run. Something that you just bring to mind is when we're talking about the top momentum companies on the market, something we look at is sort of not only the top 30 on Fridays, but further down the ranks. And just in the last week, at the start of the week, there was more than a quarter of the companies in the top 200 momentum at everything on the ASX. 50 of them were mining companies. And then that number's been increasing and was increasing up until Friday, and also even higher still again yesterday. So when you're talking about relative strength, they're just growing in numbers. It's how many of the leading companies on the Australian market from a momentum perspective are actually mining companies. So this report's great. You've unpacked the commodities and what's behind them, and then also talked about the pitfalls to look for those pivot points and levels that you've just talked about are hopefully going to be really useful in the week or weeks ahead.
Yeah, I saw two things this week. I thought, I think it might have been, I'm not sure it was Steve Johnson there, had the stat out there, something like 25% of the ASX 200 we basically had a list of all the stocks that were making 52-week lows. That was a ton of stocks. It was a massive number of stocks. And then I saw yesterday, news.com, there was a leading article about the market, about, kind of negative, basically something like 173 companies trading, like, 170 zombie companies trading, it was just like a really, really negative article, like page on the top, I thought, wow, they're all the hallmarks of a great low. When you're seeing those sort of stats and negativity, that's the sort of negative sentiment sort of hitting that sort of that peak there. So those are all sort of signs of actually a turning point for markets here. So that's why I think there's so there's a lot in terms of all the lows of the past year. This is it's got a lot of all the same ingredients all occurring here in the last few days there. So I view that as very encouraging.
Well, talking about those headlines, it reminds me of the book you talk about, which is Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. And he's got in the book, it's got a plethora of headlines from the 70s and exactly what you're talking about, and using that as a contrarian indicator. So it's not the first time that it will have happened, and it's definitely not the first time you've talked about using headlines as a bit of a consensus contrarian indicator as timing. But there's more to it, and obviously your technical analysis is paramount to getting that timing right. So on that point, we might say thank you very much for the report, the insights, the leading sectors, and the key points to look for. Gary Glover from Novus Capital.
Thanks, Chris.